Welcome everyone to the CFO Swinger Watch Report technical analysis video for the trading week of November 3rd through 7th. Now, the following research in each and every single weekly report is a chance at applying your own learn and earn trading system. On top of that, the combination of the weekly report and this technical analysis video will give you a complete top-down analysis on the overall markets and individual trade ideas. Overall, every report will be giving you full guidance in the upcoming trading week, allowing you to cut down on the extensive research time that is usually needed to achieve a very successful trading week. Take a look at the description box down below to start learning and earning through trading with us. With that, let's get into the markets. So I'll say this for this trading week, the very first trading week of November. Caution is warranted. Why? Well, take a look at the screen with your eyes. You guys are taking a look at the weekly time frame of the S&P 500 ETF, or ticker symbol SPY, SPY. And last week, we ended up with a very nice looking gravestone doji candlestick. And again, this is from a weekly perspective. And this gravestone doji candlestick clearly indicates that we have gone a bit too far away from our short-term weekly SMAs, and that is the weekly 10, this red line here, and the weekly 21 SMA, this light blue line. And we have been straying so far away from the weekly 21 SMA because if you guys go all the way back, a couple months back, okay, we broke above the weekly 21 SMA on the month of May, right in the middle of May as well. And we haven't looked back since. And in fact, we haven't even retested the weekly 21 SMA. And so if last week's gravestone doji candlestick is a true indication that we have reached an intermittent top for a solid and very much needed pullback, I expect the price to at least retest the weekly 10 SMA again. But if that retest comes, okay, that will be our official third retest of this weekly 10 SMA. And I'm saying that from the perspective of the fact that we had this first retest and then this overall second retest area on the weekly 10 SMA. Okay? And if that third retest happens, there is a higher probability that we can see an actual break below the weekly 10 SMA until we reach the first official retest of the weekly 21 SMA right over here, since we broke over it in mid-May. And again, as a reminder, as I said a couple seconds ago, we have not retested the weekly 21 SMA ever since we broke over it. Okay, so that's a very, very strong sign that we have to really have a solid pullback or even a correction at this point to retest our major SMAs, our short to midterm SMAs on the weekly time frame perspective. Okay, so again, caution is warranted, and the volume, the selling volume especially, continues to increase, right? I mean, if you just take a look at the three the red volume bars from the last couple of months here, since September, including last week, we have been seeing an increasing amount of selling volume. And that clearly indicates to me that there are some selling going on at these highs, which makes logical sense. So even if I'm wrong, right, these selling bars right here on the weekly time frame is something that anyone should and would be doing at these highs. Okay? And so again, overall, if this gravestone doji candlestick from last week is indeed an indication that we have reached sort of a euphoric high and an intermittent high as well, then I would expect the prices to come back down to at least retest the new all-time high resistance and current support level of $670. So again, this was a previous whole number resistance level that has now turned into a new support level since the prices are above the 670 whole number support level. Okay, now if you do lose 670, all right, then there's a good chance that we can start ranging from 670 to 654.50. And again, that's only assuming that last week's gravestone doji candlestick was a sign, indeed a sign that we have formed an intermittent top. Okay, so please watch out for these two specific levels at these all-time high price ranges. Okay, and if we do in the midterm future start oscillating and ranging between 670 and 654.50, I would expect the weekly 10 and weekly 21 SMAs to start coiling with the price, and at the very least start consolidating with the price as well. Okay, so something like this if you guys want a quick visual. Okay, this is a very simple textbook consolidation. Okay. All right, so that's kind of it for this week. I mean, we've just been simply going straight up. So I just want to provide you guys an opportunity to take a look at the opposite side, where we could potentially be seeing a downward spiral back down, right? Since we've been going straight up with higher highs and higher lows. And so we need to be ready for the event where we eventually see lower lows and lower highs. All right, so make sure you guys remember what I've just told you guys today. And with that being said, let's take a look at our first official swing trade idea for this week's CFO Swinger Watch Report. And that is ticker symbol DOCN, or Digital Ocean Holdings Incorporated. So I want to first start off with the weekly time frame. Now, obviously, you guys should have read the report first before you guys are looking at this and watching this technical analysis video. So please pause this video if that is not you, right? Pause the video and go back to the CFO Swinger Watch Report and read it from top to bottom. Again, read it thoroughly. All right, so I've already went over the technical analysis on this ticker, but I want to give you guys a thorough visual on what I'm seeing on this ticker. So first of all, DOCN, or DOCN as I like to call it, was a very successful IPO back in mid-2021, and it had a very, very momentum-filled, euphoric almost, well, not even almost, it was a euphoric run to the highs, as every single software and tech name had a huge blast to the upside due to the Fed basically propping up the economy and the overall equity markets. And eventually, that euphoria stopped and we had a very sharp pullback, and obviously, the bear market of 2022 occurred. And from that point onward, DOCN hasn't been able to recover. However, it has been making a massive base in the form of a nice wedge chart pattern. It's a multi-year wedge chart pattern that began in 2022 with its frequent pop-ups to the upside, right, as seen here and over here. And eventually, for most of 2023 to 2024, including this year, we have been moving sideways. And as we've been moving sideways, we have been adhering to the parameters set up by the trend lines that have formed this massive multi-year macro wedge chart pattern. Okay, this ascending support trend line and this descending resistance trend line. And in between the parameters set up by this wedge chart pattern, we have horizontal levels here, specifically 4 of them that you guys have to know. Okay, so we'll first start off with $27, then $33, and then $39, and eventually $45. And between, I would say, 39 to 45 is where we saw that consolidation occurring, that initial IPO base back in early to mid 2021 before it began its launch into early summer and into late summer as well. And so if we were to follow that same kind of basing up here between $39 and $45, then that would also mean that this wedge chart pattern could give us a nice breakout to the upside. And again, wedge chart patterns are a neutral chart pattern because of the fact that it can give us 2 different outcomes, one to the upside and to the downside. So please remember that if you guys didn't know that. And so in our case, where we're trying to be a bit more biased to the long side, to the upside, we want to make sure that the price is able to consolidate at the upper ranges of this multi-year wedge. Okay, and so staying between 39 and 45 will be absolutely critical for us to have a nice follow through to the upside of this macro wedge chart pattern. And again, there's been a lot of overall retail sentiment and hype, bullish sentiment actually, and hype with this ticker. So there is a lot of overall bullish sentiment just from retail alone, but it seems like institutions are starting to take notice of this ticker as well, as I've stated in the overall top-down analysis on this ticker in the report. So again, please read the report. Now, DOCN has earnings coming up this Wednesday after pre-market, excuse me. So make sure you guys are looking at your initial risk that you want to take on for this ticker if our entry point triggers. All right. Now, with all that being said, if you go down the daily time frame, things look even better because the entire time that we've been ranging in between the parameters of an ever tightening wedge chart pattern that we have just seen in the weekly time frame, DOCN has been making higher highs and higher lows from the lows of 2027 all the way up into the highs of 45. So it has made a complete round trip after coming down from 45 here to 27 and then bouncing away from 27 all the way up back to 45. So again, the price is continuously adhering to the parameter set up by the horizontal levels here that I've just shown you guys and the overall macro multi-year wedge. And currently we're in the process of trying to uphold the upper ranges between 39 and 45 as seen on the weekly and on the daily here. And I love the fact that last week we had a huge jump in volume, yet again, specifically buying volume, right at this $39 level, and has continued to uphold the daily 10 and the daily 21 SMAs. Again, the red line and the light blue line respectively. And I love the fact that last Friday we were able to close above both of my short-term SMAs, and that clearly gives the bulls a bit more confidence that we can see a nice, at the very least, a nice move up higher into earnings, which is again this Wednesday pre-market hours. Okay, so hopefully we can get a nice pre-earnings trade, and maybe you can get out before earnings. Or if you're choosing to be a bit more risky, then you guys can try to hold into earnings, and hopefully it goes well for you. But for anyone out there who has had a large position in DOCN, or at the very least a sizable position in DOCN, maybe from the late 20s here or early 30s, you guys should shave off a little bit before earnings so that you guys have less risk heading into a 50-50 catalyst event. Because that is my advice for anyone out there who is holding DOCN or has been holding DOCN before earnings comes up. All right. And so again, I've given you guys the full 3-point game plan breakdown for this ticker in the report, along with the specific option contracts that I will be looking to get for this ticker. So please read the report. All right. And that is it for this video, because I am looking to do a 2 or 3 part series of this week's technical analysis video using the additional tickers from the list section of this week's report. So that means I'll be going over one single ticker from the list in one video, hence the 2 or 3 part series. So make sure you guys watch out for that by subscribing to the Charts Focus 1 channel and clicking on that notification bell as well. Now, if this overall technical analysis video was insightful and most importantly applicable, make sure you guys smash that like button down below. And if you're new here and you aren't subscribed to the channel, make sure you hit that subscribe button as well. All right? But if you're watching this video when it just became public and you would like to watch this video when it's exclusively sent with the report, you simply need to become a reader of the CFO Swinger Watch Report. Plus, becoming a reader will automatically give you full access to the private CFO Discord community where you can expedite your learn and earn trading system. Okay, so thank you guys so much for watching this video to the end, and good luck tomorrow.